I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week. And a look forward at what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market swung widely last week as investors got a sense that the forces that helped the stock market soar since March were gone. While most participants thought there was little risk that the markets would have any kind of correction with all that government support, and a correction quickly came upon them before they even knew it. Techs corrected sharply, and those heavyweights in the indexes overwhelmed any rotation into other groups. In just 3 weeks, we saw the S&P 500 fall 10%, and many people would say that's a correction. The Nasdaq down around 15% from its peak levels. There were a number of issues that brought fear into the hearts of investors this week. Monday saw a really bad start to the week as the banks in the Eurozone moved down really sharply on news of a probe of decades of money laundering in those banks. Also killing the EU stock markets was a second wave of COVID-19 and threats of shutdown in the Eurozone countries. Friday, there was more news on those Eurozone banks as they moved down very, very sharply again. I'm going to show you some more about that in just a little bit. Throughout the week, government leaders sniped at each other over the timing of the appointment of the next Supreme Court justice and how that could actually get in the way of the next COVID relief program. The big issues really is that central banks around the world seem done adding more QE, and they seem ready to see how their 6 months of insane printing does as far as stimulating the economies. Powell and other Fed heads were out there pushing fiscal stimulus. That's because, well, they're really out of bullets. They hold a massive amount of paper, and the total now in the mortgage market debt that they hold is up around $2 trillion. So their balance sheet is so unbelievably bloated, but you never know, they could put more in there. And it seems nearly impossible for a deal to come out of Congress because they kind of hate each other. And the question is, should they make a deal anyway, really? And what should that deal look like? It certainly wouldn't be my policy to put a deal together like the Democrats want to. That's about $2.4 trillion, of which a great big portion of that is a bunch of pork of programs that they couldn't pass before. And the fight is whether or not we should be building any more large amount of massive debt. You have to help the people in a period of a pandemic. But what should that really look like? That's really the big question. All of this has investors realizing that the huge rally that we saw all the way since March, that has brought it to some ridiculous pricing valuations. And it's all because of the Fed. And what central banks basically done and now just screaming for fiscal spending, maybe you'll get some of that, but then I think it's going to be one and done to get another rescue program for COVID-19. And with all of that, it seems that the price support for stocks is gone. The amount that they moved up over these years has been just phenomenal. I'm going to show you some charts in just a moment on that. And some reason to believe that there is a significant issue for the stock market. Our work showed that there'd be a decline into September. We thought it would be only into early to mid-September, and then we'd get something like about a 4 to 6 week rebound, and then saw a lot of big risk in the market. Well, things have changed. Now it looks like it's all risk. And that window that was there for a rebound got wrecked, and that the market is in a lot of trouble. We'll look for attempted rallies, and we think that all rallies are fake, and a top is in. And I'm going to show you in just a moment why I think that a bear market has started. So stay here, and I'll show you a lot as we move forward. Stocks for the week, S&P 500 down about 2%, the Dow down about 3%, the Russell down about 5%, and the NASDAQ has edged up a little bit after getting totally wrecked for the last few weeks. For the broad market, S&P 500 Dow, it's the fourth week in a row on the downside, and that's the longest in more than a year. The bonds, 30 years, they're up about 1.25 points as a safety bid came in, but that was not very powerful. And we're cautioning that we could see yields moving to the upside again. Please watch Future Speak every single Wednesday, and we give you that deep analysis on the Treasury market. 10-year yields drop about 4 basis points on the week to about 65 basis points. Gold falls about $88 on the week. Silver down about $370, $380, and that's down about 13% on the week. There was a capitulation. We thought that the market could get down, but this was even deeper than we thought on the downside. The dollar, 5 for 5 actually. One of the days was only up 1/100 of a percentage point, but 5 for 5 on the upside, about a 2% gain, and that's a huge gain for the dollar. A safety bid comes in, especially under the conditions that are going on in the Eurozone, with the banks getting absolutely slammed, and COVID-19 looking like either it's another acceleration of the first wave or it's a big second wave coming on there. Oil market down about $1, and that's despite inventories having been drawn down. And there are demand worries out there, and of course worries that Saudi Arabia needs money and that they have been putting pressure on pricing in the oil market. So we saw oil moving down this week, and potential for another little move to the downside, but we think oil is going to stabilize. So again, watch Future Speak and you'll get some sense about that it might be a couple more weeks. I'll show you that in the short-term view as we go forward. All right, what I want you to do is I want you to go to askSlim.com and explore our website. There's so much there. Make sure that you go to, if you're watching this on YouTube, or you can go to the YouTube channel to see all the posts we put up, and subscribe to that channel. Click the notification bell, and that will let you know when we've made a post. Make sure that you like this video and all of our videos. That does help us. And if you don't like it, let us know why, so that we can be better. That's what we want to do, is keep getting better at what we do. Twitter, well, you can go there and follow us at askSlim. And if you want more membership information, write to Matt at askSlim.com, and I'm going to show you some just phenomenal stuff coming up. So make sure you watch the whole video, and some people are just going to watch the clips or go forward, but you do not want to miss what I have coming up for you as support for traders and investors. So don't miss that. But now we have something a little bit different that I'm going to show you, because I talked about something that I think is happening now. The end of the bull, Eurobank debacle, and the leaders are having their biggest monthly reversals, well, that we saw maybe ever. I've got a lot to show you about that. But we're going to start out with, and I talked about the Eurobank debacle. Well, how bad is it? You know, we saw the debacle that went on in 2009 in the financials. And of course, we had big recoveries in the financials here in the U.S. after that. But how about in Europe? How bad is it there? And how bad could, if it were really bad, could that bleed into the U.S.? That's really a question. Take a look at this chart. This came out of Zero Hedge. The Stock 600 Bank Index, this is the European banks, it's an all-time low. It had some rally, as you can see. It went up from 100 to about 240, so it was a pretty significant gain out in 2009, 2010, 2015, another attempted rally, 2017, another attempted rally. Now we are at all-time lows in the European banks. This is a horror, and better believe that it means something here in the U.S. also. and you could see that our bank stocks are getting weak. Well, are they? Let's take a look here. This is the XLF monthly. And what you can see is that we had this huge decline right in here, and that took a huge chunk out of the valuations in here, as the XLF fell from 31 to under 18 in this March decline when the stock market lost 35% of its value. And then you had a big rally. Now, what are we looking at here? We're looking at a cycle chart. These are cycle rhythms that you see in here. And if you're new, this is a drawing tool on the bottom, and it then just gives us a sense for the rhythms in the market, the money flow, money coming in, money coming out. I want you to see that after this big break right over here, you came up and had a big reversal. That's called a shooting star, and then this reversal to the downside again. And this really looks like this cycle here has peaked, and now we're on the way down into late 2021. So this to me is the first indication, and what we see in the European banks, another indication of the fact that there is weakness here to come as a top in this financial rebound appears over. And for those of you that are Elliott wavers, and I'm really not, cycle analysis is not Elliott wave, you'll be looking at an A, B, and C reversal there, or bear market that we have there. I think the financials are in a lot of trouble. And low interest rates around the world certainly has made it very, very difficult for them. So now let's just take a look at some other important charts, because I think we have to look at what does this market look like after the reversal that we had in the stock market in this last month. Well, look at here. Here is the market from 2009 all the way up to what it did this month. This is one of the biggest monthly reversals. That's called an engulfing pattern that you see right over there. And that to me looks like a bear market top, and a bull market top, and the bear market beginning when we see that. So that you can see the S&P 500 monthly, that was a major reversal. How bad was the NASDAQ? Well, take a look at this. After that big 1,300% gain off of those 2009 lows, it gives you the biggest reversal that we have ever seen in the NASDAQ. I believe that is very significant. How about these market leaders, in the tech stocks that have driven the market up? XLK is a good example of that as we look at the Spider technology. And there you can see that's called a dark cloud cover. And that looks to me like a major top. How about the individual stock leaders? How about Facebook? There's your engulfing pattern right in there in Facebook. That's over with. Yeah, the stock falls from over 300 down to about 243. And now it looks to me like if it tries a rebound, the sellers are going to be waiting there. How about Apple, the big market leader that has moved this market up so significantly? This is post-split after it trades up to 137. That is a dark cloud cover. It trades down to about 103. Big decline there, and I think a major top in Apple. Get some rallies in there. If you're long this stock, well, that certainly could be an opportunity. Google has had a horrible pattern all along. We believe looking at our intermediate patterns that this stock was topping, and there you could see a very significant engulfing pattern in there. You could see the engulfing pattern that happened here before the big decline in March. I wouldn't be a bit surprised to see another big downside month coming in there in Google. That looks like a terrible pattern. Microsoft has been one of the tech leaders that's been incredible. And there's your engulfing pattern in there also. And just one more to show you as we look here at Netflix, which in my opinion is absolutely finished. And I think this stock, based on cost, based on competition, had this massive move because everybody's staying at home. And what this really all is, when we look at this, is just a reflection of the fact that there was just a mad buying binge with all the liquidity that was put in there by the Fed. And now those unrealistic prices, those massive prices that we saw in there, in these very high flyers and big market leaders, they got pushed to prices that made no sense, valuations that were nuts. And now the big reversals are there, and people are going to be desperate to get any rallies to get out of those stocks. And I think we're going to see some significant failures still in there and many other groups in the U.S. So what that looks to me like is that, well, these European stocks, they are bleeding into the U.S. banks. Financials really looking really poor. Major top really looking like it's in. And I say to you, beware of being hooked in rebounds. I think it's over. And I think that the bear very likely has started. And I think that this is meaningful when you have the European banks at all-time lows. This is what I think is a very, very bad situation. And that is a question. Is that the end of the bull? I think so. All right, so now we're going to move forward. And let's take a look. Here is our short-term view of 5 major markets that we do every single week. Take a little accounting of how we did in the previous week. I was off last week, but the week before I looked at 2 weeks in advance. I'm going to give myself 55 to 60%, a slightly substandard week at all the different ways that I rate the way that I did the analysis. There were 2 pretty good misses in there. Light crude market made a bottom a little bit earlier than I expected, so the shape wasn't really as expected. And also in the stock market, the market was much weaker than I had given it credit for, and so we get a miss in there. We were very right in the dollar and in the bond market, and mostly right in the gold market, though it fell a little bit further than we expected, but we did say that gold could break 1910 and head down to 1875, and on the outside 1830. Didn't quite get that low, but really overall followed our pattern. So we're going to take a look now as we look at these 5 different short-term markets for our short-term view. So the first one we're going to look at is the light crude market. This is light crude on a daily chart with cycle analysis. Again, for those people that are new, what we look at are the repeating rhythms in the market. The bottom right over here you see are the cycle brackets, and what those cycle brackets are telling you is where the rhythms are. There are rising phases and corrective phases, and when the corrections don't come, it's because it's swamped. And what that means is that the upward component of that momentum indicator that you see right there, which is the slim ribbon, if you don't have the slim ribbon, make sure you download it, and you can now run that, whether it be on Thinkorswim, which you download from our site, or you can also get that on TradingView. The upward momentum was so strong there were hardly any declines during these corrective periods right in there, and then all of a sudden it did have a pretty good decline, and that was in a line with an intermediate decline that we were expecting. Now we got this rally back that was a little bit stronger, hits the sell zones, and then begins to move down. So what are we looking for here? Well, we're looking for a little more sideways action and then moving back down and test the area of support around 38.40 in the next 1 to 2 weeks. We think that area is a buy, and you can see it labeled here as the buy zone if it does get down around over there, because we think intermediate patterns are turning up. Momentum right now is still negative, and this was a sell indicator right over here, and you can learn about the projection oscillator used along with the slim ribbon by going to our site in Tools for Text and look at it's called Slim's Favorite Study Pair, and we talk about the slim ribbon and the projection oscillator. So you can watch that if you're a level 2, 3, or 4 member in our library. I'll tell you more about the library in a moment. So the right in here, we're still in negative momentum. We expect that this will be moving back to the downside again one more time. Some of the evidence is that the intermediate patterns are likely going to bottom in the next couple of weeks, so that the decline we're looking for is going to be alongside opportunity. When we see it get down into that area of the buy zone, we look at time and price in this analysis. Right now, all time frames have negative momentum, so it should weigh on this for a little bit, and then it's got some work to do to make that bottom. So that's light crude on the short term. This is gold on the short term. We have this analysis in here, and all the charts look a little bit different because we put more or less information in it depending on what we want to include. This silver bracket down over there is silver. So in other words, we're overlaying the rhythms in silver onto the gold chart. And the silver market ran past this. It was really weak. The gold market, this cycle is actually widened out by a bar since we last showed you, and that is a pretty minor change in here. And what we're looking at right there, as you can see, is that there is likely going to be a rising phase coming right in here in the gold market. That aligns with a rebounding rising phase here in the silver market also. So that says to us that it is likely that we're going to get a rebound, some upside. But there's been some damage done in here, and we're not looking for the higher prices right now that we were looking for, of the tests of the all-time high. We think that comes later on. So right now, for the next couple of weeks, what we're looking at in here is a low either being in place or being made in the next day or so, and then getting a rally. You can see it points up to that center resistance area around 1918. So we're looking for that move up and test that resistance area around that 1918 to 1934 zone right there, and then moving down again. We don't think it's going to do better than that right now. And part of it is, of course, that we see negative situation in the stock market. And when there's a liquidation going on, well, they liquidate everything. And gold and silver get caught up in that, and we see that right now. So what we're looking for is this bottoming coming in here, and then an attempted rally that really probably will not hold. 1918. Momentum turns negative right in here. That is significant, and that means that if we get some rallies up in here and we get the projection oscillator coming up over the 75 level, it's going to be setting up some sell indications. So it's going to be hard to get a rally that holds here in the gold and in the silver market. Some of the evidence is that gold and silver have short-term upward turns that we think are there, but and that aligns with the what we think is going to be a dollar pullback that goes into November. So the metals for the long, could be good out into November, but not really making much higher prices that we had originally expected. All momentum, all time frames are negative here in the gold market and in the silver market. So we think that these really have work to do, and that rallies will not hold that well in the gold market. So we just talked about the dollar in relation to gold. Here is the dollar market. And you can see in here the same cycle rhythms in here. Now, what's happened in here? This is kind of unusual. This was a very early bottom on these on this cycle. So we kind of have a shift back to this area right over here. And it got up, we said it would get up to about 94.50. And now the resistance right over there about 94.80. So it's getting right up in there right now. We don't think that there's a lot more to go as we get up into these sell zones right there. I'm just going to move this out of the way so you can see this a little clearer. This coming down to that 89-day moving average, which is often a resistance. So we think it's gonna try to move a little bit higher in here, a little sideways, because the bids are coming in because of the situation in Europe, and that's bringing you weakness in the euro currency, which is 57% of the dollar index. So we think it could make a little bit more upside ground outside getting up to that level about 95.40. But that's the outside. We think this area around 94.80, 94.90 is really what's going to stop it, pretty close to where it is right now, and then moving back into these support areas over the next several weeks. So some of the evidence, momentum is much better. You can see the momentum turn positive right in here. While it was negative, you could see the amount of declines in there. Now it's turned positive, so that's going to really hold it together, and that's a reflection of the safety bid that's coming in to the US dollar as the momentum has improved. Momentum is still negative in the longer term, however. Some of the evidence is that Momentum having improved, we think that, and U.S. stock market and world market still being weak, this is going to hold relatively firm, that there probably won't be any major pullbacks, and it's going to be able to keep most of these gains and maybe a little bit more for maybe the next couple of weeks before it then does start to move back to the downside. So that is a look at the U.S. dollar. Now let's take a look at the bond market /ZB. You can see the beautiful cycle rhythms that we have in here. I'm just going to blow this out to a 2-year daily right there. And these are called harmonic families. As you could see, the dominant cycle very, very clear right in there. The dominant cycle very clear right in here and right in here. And each of these made up of these little minor third cycles that are pretty clear. So where are we right now? Well, it's trying to rally in this second minor third right over there, but in these resistances, it's not really able to get up through it. So we don't think that there is much more in here. The next few weeks, we can see, a little downside, some more sideways chop, and then out over here, the risks really pick up. Momentum, you can see in here, totally choppy. When the slim ribbon kind of is real close, it doesn't give you any momentum indicators, which is telling you it's not able to establish any momentum. So the sideways chop is likely to continue until I think the downward pressure then does come in the bond market as yields then begin to move to the upside. We see it holding a tight range, maybe getting up to 177.14, where that top of that resistance is right there, maybe a little bit higher. This is up here at about 177.28. So there's a little bit of upside in there, but then we think that it will then start to move back to the downside and accelerate. Some of the evidence really says that the intermediate patterns are suggesting declines, and we see that the pressure is likely to build out into October and even can project still a price of 171 in the ZBs. Out into that period into November. So this is a maybe mid-October or late October. So that is a overall pattern that is looking to us very weak, and that only the stock market being in a very weak mode would keep it from moving down, we think, pretty sharply. So that is a look at the bond market as we look at the first 4 of our short-term view. So don't go away, because I have an amazing thing to show you right now. And then after that, I'm going to get to the analysis of the stock market and the S&P 500. But first, you've got to see this. Do not speed forward, because if you're not an AskSlim member, well, you're going to want to be based on this fantastic deal. This is our special Level 3 trial, education, analysis, and support for traders and investors. We're going to offer you right now 8 must-have content categories for just $49.50 for the first month. And there's even 3-month trials available. So you're going to write Matt at askSlim.com, because I'm going to show you all of this. And then you might want more information. He'll give you more information on any of this content that I'm talking about. Or he's also going to send you the links for the $49.50 for the next month for all of this that I'm going to show you right now. Let's start out by talking about our special trial on the Slimulator rankings system. What this is the best 84 traded symbols. So I'm just showing you 5 symbols in here. And there are weekly and daily charts in there, all of the work that we have done on all of our cycle charting on these best 48 stocks, 12 ETFs, and 24 of the futures contracts, including the indexes. You get all the momentum conditions in 3 time frames. You get the sum of the evidence, directional bias. You can see that, slightly bearish, slightly bearish, slightly bearish. In all of those, Amgen is neutral to slightly bullish, and that's the sum of the evidence from our algorithms in there. We have scan modes. You can scan to see recent changes. You can do individual searches. 84 best traded symbols, and these are the best option symbols also. So this is a great tool for you, the Slimulator ranking system. You're also going to get in this trial our trade ideas. So this is just an example. I just cut off the top of the page right over here to you see, which has our most recent trade idea in there, which is on Square. And you can see the position bias is short. This is analysis to help with your directional decisions. You get target zones, you get entry zones, so that you can improve your likelihood of profitability. All you have to do is roll over each of these and you'll get the highlights for each of the trade ideas. In other words, it highlights it and you get the status. And you can also click and sign up for our notifications, and when things get close to the entries or exit zones or any of that, we'll send you a notification as long as you have signed up for that. Our trade ideas has been phenomenal. When you click on that square right over there on that line, what you see then is our trade idea, and it gives you all of the information. You get one or two of these trade ideas every single day, as long as we find something that is a high quality. And you can see in here the price at the time of the analysis, the bias, and the holding period in here was short term, likely for 1 to 3 weeks. We give you the entry range, we give you the target range, this is the reevaluation level. In other words, if the analysis changes, we want to have a level to let you know that that's occurred. And then we give you the technical briefing of what we see in there. So there's no mystery in here. We make it so clear to you, and we let you know how all of this does also. And we have a phenomenal record on this, especially on the directional bias. I mean, we have just an amazing record as far as how right the directional biases are on this. You can ask Matt about that if you want. You're also going to get our stock index report live stream. This is the 3 major indexes that people trade, the SPX, the NASDAQ, and the Russell. This is 15-minute charts. You get support and resistance levels, and you get our acceleration zones. This is how you catch the big trades, by getting on the right side with the reversal scout. You'll also have a great sense for which is the stronger or weakest index if you want to do pairs trading in the futures or in the ETFs. It's just amazing, and we get so many compliments, people telling us that it changed their lives because they're active traders. This is meant for intraday traders, and it's fantastic information. That is the stock index report live stream. You're also going to get the stock index report daily snapshot, where you can see in here you get our trend and momentum technical evidence. This is for the spiders or right there, but we're also going to give it to you for the NASDAQ and the Russell. You can see in here the technical evidence comparisons, and it tells you the trend condition and momentum conditions for all 3, S&P 500 and NASDAQ and Russell, and you can see what these conditions have been, and that has been really helpful when you look at that. You're also going to get in the daily snapshot 2-hour information. This is for swing trading, for giving you a good sense of market condition. You're going to get the 2-hour with the slim ribbon indicator and the reversal scout on there, key support and resistance level. You're also going to get the momentum conditions in here that you can see, and our market condition indicator on the indexes, which is normally only available to our level 4 members for them to put on their Thinkorswim chart. So fantastic amount of information that you're going to get, and you're going to get our daily charts with all of the cycle analysis on it on the 3 indexes. All of that in the daily snapshot that you're going to get. Plus, for this level 3 trial, you're going to get our weekly stock index report. It's for in-depth analysis for swing trading, investing, the weekly ETF review, where we look at the key spider ETFs, the Slimulator momentum tracker, I'll show you that, and also our massive video library. All of that, that's 8 different categories. The momentum tracker looks like this. This is just incredible. Over 1,000 symbols in there, 22 built-in watch lists. For investors, position traders, you're going to get our directional bias for looking out at 3 months right there. You're going to get the conditions and the bias. Here you can see American Airlines very bearish, Apple bearish, the different time frames and our momentum readings. You're going to get this pie chart right over here, which tells you the conditions of all of the symbols in each of the 22 different canned watch lists, or you can build your own watch list in there. You can then scan on them. You can scan for changes. This is just one unbelievable app that we built with our own proprietary algorithm. So you're going to get that also. And you're also going to get our massive video library, which we put 3 new ones in each week, 9 different video categories, over 500 videos you're going to learn from my 46 years experience. I did every one of these videos. Future Speak on Wednesday, which gives you our cycle analysis on 24 different contracts. Tools for text. I discuss many charting tools and studies. There's about 80 videos in there. Trading psychology. I'm certified in emotional intelligence. I've been 24 years certified in facilitator in personal growth work. I bring you a ton of stuff about how to deal with personal issues that get in your way of profitability. IRA-MO, we look at some longer term things in there. Stock sectors. RV is now doing some fantastic work in there. So where I said I've done all the videos, now our lead analyst, RV, is just doing brilliant work in there. So you'll see all of mine and now all of his. You'll learn so much about the analytical style. Big picture analysis of important major markets. People love when I do that. Styled strategy and plan. Many different subjects on engaging in the markets, on being a trader. You get Market Week Archive, which you can go back and refer to all of the teachings that we do in here. And now you get AskSlim Live, replays of our live events that we put in there. We invite different levels of our members, and then you'll be able to see that at AskSlim Live. Can you believe it? All of that, 8 different must-have content categories. All of that, level 3, a membership trial, just $49.50. Yeah, that's less than going out and eating dinner for 2. Of course, you might have to get it delivered to you right now. But that's for the first month. And it's easy cancel. Just let us know if you don't want to stay, and you will not be charged again after that $49.50. And you can save even more money by getting a 3-month trial. And you will just be fascinated with all this content. It's going to be a while before you can keep up with it all, because we have 3 pros with massive amount of experience bringing you all of this analysis. Write Matt at askSlim.com for the special link for this trial. That's the only way you can get it. We don't have it out there published. So 3-month trial is also available. He'll send you that link. Write Matt at askSlim.com, M-A-T-T at askSlim.com for this phenomenal special that you get. 8 categories. We have really loaded this up right now, and it's just an offer that you can't get anywhere else. All of this great analysis. We want you to be so successful, because your success is our success. Write Matt at askSlim.com. Okay, here we go. Short-term view of the stock market. We're going to look at the S&P 500, SPX, and you will see in here, as I switch over from the bond market, which is still there, over to the S&P 500. The analytical style on here is slightly different right now when we do this, because we've broadened it out a little bit with more information, which then shows you the beautiful cycle structures that are in here, and then gives us even a better sense about which of those channel areas, the top or the bottom, it's trading in. And when you get a significant breakdown, as we've had right over here, where I'm just going to look at these last 2 cycles right over there, this breakdown right over there is just a very, very key piece of information. What it says is that this cycle right over here is not bottomed yet. And it points out over here to somewhere around the 6th to the 8th, let's just say, of October before this cycle is over with. And we are in a declining phase. We think we're in a little rebounding period right in here and then coming down. So this is really, really a very bad pattern that we're looking at. It is the kind of pattern that brings free fall markets. It could just move sideways, of course, and come down and test this low and get back down to about 32.10. That would be a best case that I could make. The likelihood over the next 2 weeks, 1.5 to 2 weeks that we see in here, is that a little bit more chop, it maybe could get to that 33.04 to 33.28 sell area, but then again, maybe not. And there is a possibility for some very large down days in here. What we're looking for, you can see the black arrowed one, is what we consider to be the highest probability that we trade in that shape that we see in here, and then down. This fib extension, the bottom of it right there, is around 31.50. That to us is a reasonable target for the downside right now. That's about 120 points in the S&P down over this next week and a half. There's an outside chance here at about 30.60. We don't think that is likely, which is 30.57. That's the support from the weekly chart. And you can see very clearly we're trading in this downside cycle in the lower half of this cycle. It's really a very negative situation. Momentum has turned negative in here. All time frames are now negative in these indexes, and that is a really poor condition. When that happens, well, the sum of the evidence is that the cycle structures are very negative. We believe, based on what we showed earlier in the show, that the bull market is over and that there will be some rallies that look pretty good, and we don't think that's going to come until sometime out over here into October. And even then, we think those rallies are going to fail in a big way. We think that the biggest surprises are going to be on the downside. You see the way we came off the top right over here, and you see the way we came off the sell zone right over here. We think that you're going to see more of these days coming up here. We did some very deep analysis in Futures Speak on Wednesday. If you take our trial, you'll be able to see what we said last week, and you'll be able to see what's coming up in the next week. So we're going to continue to do this deep analysis. We update these all of the time for our members, so they really get a sense for market conditions. These are very bad conditions, and we can only say when we see this type of setup, which is very mechanical for us, that there is a ton of downside risk that we see, and the upside is limited. Remember that financial chart that I showed you in Europe and in the United States, and all of those major reversals. If you're just watching the S&P clip here, go back and watch that in the show, and you will see what I'm talking about. There is risk here, and I would make the risk rewards right now about 4-to-1 on the downside based on what I'm seeing in here. So it's pretty bad. A multiple time frame bias is negative. The cycle structure is negative, and that's what we're looking at here. When you get in those conditions, you have conditions for a lot of downside risk. S&P 500, we're looking for only some sideways chop, minor upside potential, and big downside potential based on what we see here, looking out over the next 1.5 to 2 weeks in there. So I say, make caution is important in here, especially on the long side. That is a look at the S&P 500 and our short-term view for the stock market, the S&P 500. That's it for the whole show. If you did not see the beginning of the show, go back and watch the important thing I showed you on the market leaders with all of those massive reversals. Go back there and watch all of that. I think it's very, very important information. I think it's really time to consider long-term allocations. And if the market gives a gift to move to the upside, well, I think that is a gift that should be taken. That's it for this week. I want you to be so unbelievably careful because it is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to sit in I've been cruising.